Good morning and welcome to the Loadstar podcast News in Brief, where, as always, we're going to be recapping last week's supply chain news. Coming up in this episode, we're going to be unpacking some challenges for the proposed merger between US railroads Norfolk Southern and Union Pacific. We are going to be looking at possible alternatives for forwarders rethinking their CargoWise subscription. And we're also going to be looking at what the impacts might be on some major ports with the resumption of Suez Canal transits. And joining me at this episode, I am with Alex Lennane, Loadstar publisher. Hello, Alex.
Hey, Charlotte.
And of course, Loadstar managing editor Gavin van Marle. Hello, Gav.
Hello, Charlotte.
Alex, I'm coming to you first. At the end of last week's episode, you mentioned you would be looking a bit more about the CargoWise alternatives for any forwarders who are rethinking their use of this platform. So, are there any viable options, or is what you mentioned about their monopolistic-like hold on the market proving to be true?
Well, yes, we've had a lot of interaction with the market over this story. Do they have a monopolistic-like hold? Yes, to some extent. If you're a really big company like DHL, it would probably cost about the same to develop your own as you're going to pay for CargoWise, but it would also take a really long time. If you're a smaller forwarder, there's, as it turns out, many options on the market, and I think every single one of them has got in touch with me. I'm just sort of sorting through what we've got, really. I've become something of an unwilling expert on this subject, but there's so much more to come out. We've got the interview with the CEO of WiseTech Global, who was reasonably honest, but still kept a little bit back. I'm excited to be publishing that this week. And with Magaya, we had a really interesting interview with them. Lots of other smaller companies getting in touch. We've looked at self-build, whether Flexport might sell its software itself. But yeah, I think this is going to go on and on, possibly for the rest of my life, I suspect. We will see.
Well, I look forward to reading more about that, and I'm sure it will be the talk of the town at Manifest next month. So I'm looking forward to that as well. And carrying on to something else we spoke a bit about in last episode, and I mean, we've been speaking about it for over a year now. Last week's news gave us a bit more indication of what's happening with the return to the Suez Canal. So, Gav, what is the latest here?
Well, Charlotte, I mean, it's been a lot of toing and froing, in short. As you said, in the last podcast, we talked about Maersk redirecting its MECL1 service back through Suez between India, Middle East and the US East Coast, following on the heels of CMA CGM, which has clearly been the front runner in terms of Suez transits up to now. However, last week there was an announcement out of CMA's CGM HQ in Marseille that's saying that 3 of its Asia-Europe service would be returning to the Cape of Good Hope transits. And, in the light of the complex and uncertain international context, was the direct quote from CMA. Now, I mean, whether the security situation actually has worsened in the last week is hard to tell. I mean, things seem to have calmed down a little bit in Iran, perhaps, but I mean, everything's so uncertain. You can understand the reluctance. That said, the insurance costs definitely seem to have lessened. Simon Heaney from Drury last week said that they understood that the ship insurance, the hull insurance, was now, for the war risk premium, was now down to 0.1% to 0.2% of the value of the ship's hull, whereas they were previously at 1% of the ship's hull during the height of the crisis. So, a decline in sort of 90%-ish, 80 to 90% in insurance premiums for transiting the Red Sea area would certainly indicate that insurers are pricing the risk lower. But I mean, yeah, there's not going to be a large-scale resumption of Suez transits in the next week. Let's put it like that.
Yeah, I mean, everyone that you speak to about this, they always say that insurance is a big factor, if not the main factor. But you had some analysis, Sea Intelligence, about what might happen on the port side once transits occur. So what did they have to say?
Yeah, I mean, it's pretty straightforward analysis, really. What Sea Intelligence did was they took the line connectivity database run by UNCTAD, which is what the UN Commission for Trade and Development. That's right. And so what they did was a pre-Red Sea crisis comparison for a range of Red Sea ports and Med ports and how many connections they have today. This is the number of liner port-to-port connections which you can do on a port basis. And clearly for ports in those two regions, there are a lot less today for the very obvious reason. So once Suez reopens, a lot of these connections will be restored. And so the question then is whether the ports will be able to cope with the increased numbers of vessels calling, etc. They did a further bit of analysis, so I'm just going to mention very briefly, which is looking at North Europe. And they've come up with, we've talked about this before, where you've got the problem once you redirect ships to go back through Suez is that there'll still be other ships sort of on the west coast of Africa and basically, that stuff. So you basically get these two vessels on the same string, but they're supposed to be weeks apart, arriving at port at the same time. Well, Sea Intel have termed this the double influx problem, which I just love because it sounds like the name of a sci-fi book. So I'm going to be using that in coming weeks. Whenever it happens.
Alex, there's something else that we've been monitoring quite keenly. I mentioned it in the introduction. That's the looming merger between Union Pacific and Norfolk Southern. This hit a bit of a hurdle last week. So, what is the latest there?
Well, I think in the previous podcast, we talked about the rivals complaining that Union Pacific and Norfolk Southern had put in what they felt wasn't a really complete proposal. And it turns out that the STB, the Service Transportation Board, who regulates this, it has agreed with them. And it said, I need to check my notes, but it said that they haven't put in enough details on the obligations, its ability to cancel the deal, and there is an absence of market share projections. So the STB has effectively rejected the merger as it stands, but has said, why don't you reapply, putting in all the full proper filings and make it a complete application this time? So it's just a mild setback. I don't think it will change the dial really, unless, of course, they're trying to hide something that they didn't want to put into the filing. Or maybe it's just that the donation that Union Pacific put into Trump's ballroom wasn't quite enough. We'll have to see, but I think it's only a minor setback.
Yeah, it's interesting because we also had an interview with the director of the Global Shippers Forum, James Hookham, last week. This is a bit of a random aside, but he was talking about mergers and acquisitions, but on the ocean freight side. And he was saying that by June, we would see the beginning of a period of reckoning for the carriers. He said this could put a lot of pressure on some of the less resilient lines, meaning possible further mergers or even business failures if rates get into loss making. He was referring to kind of all that excess capacity and new orders definitely putting pressure on the market. And we recently reported that MSC have been acquiring yet more second-hand tonnage. I think they're the only carrier to have done so, the only container carrier to have done so this year. So it seems like none of the other major carriers can get a look in with the second-hand tonnage at the time of recording. But Alex, I want to stay on the overland sector for a moment. You wrote last week that FedEx has moved closer to separating its less than truckload business. What's the latest and what does this mean for the industry?
Well, this slightly follows on from an article we did a week before about UPS and the sort of long-term impact on air cargo. But with FedEx, it's really about, one of the problems is it's got a lot more competitors than it used to do, partly through e-commerce. It has decided to split off FedEx Freight, which is its LTL operation, which will be a publicly listed company from June the 1st. Really, it looks like it's focusing on profitability, the main FedEx one, because the LTL market, as we all know, is pretty soft at the moment, and profitability might be quite difficult. But FedEx itself, the reorganisation looks like it's focusing, on margin health, to be honest. And it's done quite a lot. This is, I think, sort of the final stage in its reorganisation.
Well, also in road freight news, to end this little segment, I had a report from Apply that things might be looking up for hauliers in Europe. They said that demand is going up due to easing inflation and lower unemployment rates. They said that an uptick in automotive and e-commerce purchases is mainly driving demand, but still there is that factor looming in the background of driver shortages and this increased pressure to upgrade fleet to net zero, which is going to cost a lot. Gav, we're going to come back to ocean freight now. We're starting to get an idea of carriers and alliances 2026 networks. So what's been happening there?
So last week, yes, Charlotte, there has been some moves on that. Last week, the Ocean Alliance published its network for 2026, its so-called Day 10 product. Rather misleading name, but there we go. And I've been through it. It took quite a long time, and what I did was that I compared the port rotations for this year with the ones that are currently existing for the 2025 network. I used the EZ database to do that, and really, there's very little change. Pretty meaningless exercise. There was, I mean, on literally on I would say about half the services, there was absolutely no change whatsoever. The port rotations are identical. And the ones where they have changed, it's basically been a port dropped or a slight rotational change, or on some of the Trans-Pacific services, they've swapped a call at Haiphong in Vietnam with a call at Kai Met. On the Europe stuff, on the Asia-Europe trades, which tends to be my focus, big losers. Gothenburg lost its direct connection to Asia. Gdansk used to have 2 direct calls, now has 1. There's an extra call for Felix. So probably the most interesting thing of all of it on the Asia-Europe side would be the NEU 7 string, the 7th string, which has had 2 calls, head haul and back haul, inserted an Egyptian port called Abu Qir, QIR, which has never really come up. That's the first time it's been on any of the main. It's been a port call on the main services, and I suspect this is an Asian North Europe service, right? So it goes, up the coast of Africa and into North Europe, and instead you're Abu Qir, which is very close to the entrance to the Suez Canal. So, and it's not part of the Suez routings. So I suspect that when the Ocean Alliance does resume transits, that the first service to do it will probably be that one, because it's already got these ports on its routing. So yeah, that's it. We had the Premier Alliance. I think they published their network shortly before Christmas, if memory serves. So we're just waiting to see what Gemini comes up with, and MSC with its standalone networks now.
And have these networks got any correlation to rates? I mean, presumably the carriers are deploying their capacity on the most profitable lanes. I'm not sure there would be any correlation at this current moment, but do you have the latest rate data for us?
I've got the latest rate data. Just in answer to that, though, I mean, the one thing that hasn't been done with these networks is that the vessels themselves haven't been assigned. So you've got total numbers. They know how many vessels it would be needed to maintain the weekly strings, etc. But they haven't actually assigned the actual vessels, and that obviously quite important, because that could range from 1,000 TEU to 24,000.
Yeah, I mean, they've got enough of them at the moment, don't they?
Yeah, they have. Although, interestingly, just as a thing, when you were talking earlier on about the capacity additions this year, I've just been writing a story based on some jury research, and actually the fleet is only expected to grow about 3% in 2026, and that's largely due because there was a sudden drop off in orderings during 2023. During 2023, so that's right. So bless you. During 2023, so that meant there's actually going to be a small lag this year. So weirdly, if you look at demand, which is at the moment, I think Drew is forecasting 1.82% this year, fleet growth of 3%, almost in balance.
Does that mean that we've got another few years to write over capacity stories then, Gav?
We'll always be right. We'll always be writing over capacity stories, Charlotte. I mean, I think the only time in my career that I've ever written an under capacity story was like during the pandemic. I mean, it's sort of always it's the nature of the business. It's the way that ships take 2-3 years to be built, and who knows what the demand's going to be like at the time they hit the
Anyway,
water.
We've gone on a bit of a tangent here. Let's
sorry.
go back to rates. Let's get back to what we were talking about.
Back to rates.
About 4 hours ago.
Okay. Yeah. You asked me just in our prep for this broadcast, you asked me just to look at a couple of the intra-Asia stories that have been running recently, because those have been quite interesting. I've got a sort of open question for for listeners, which is, how do you define intra-Asia? Does it include Australasia and Oceania? Does it include the Indian subcontinent? Does it include the Middle East? The carriers will talk about Far East and Middle East trades, but intra-Asia trades, it can be quite difficult. I remember APL used to include it all the way from Nava Shiva to Yokohama. Anyway, that's just
Well,
my
if
opinion.
you
But
are
I'd be
listening at
interested.
the moment, drop a
Yeah,
comment down below if you're listening on
yeah.
YouTube about how you would define intra-Asia. Sorry, Gav, continue.
Perhaps we, no, that's all right. Perhaps we could run a poll.
I don't know if
you
YouTube
know,
allows you to do that, but we'll work on
the
it.
wisdom of the mob. Um, yeah. So anyway, intra-Asia rates have been declining in recent months, both sort of between in the core intra-Asia trades between China and Southeast Asia and Northeast Asia, and also between China and India, and largely it's been a result of too much capacity being added. And I think capacity out of Southeast Asia to China has gone up 22% in the course of a single month or something. So there's been quite a lot of movement, quite a lot of sort of dynamism in those trades. On the deep sea trades out of Asia to North America and to Europe, it was a week of should I say, steepening drops. Yeah, they were down 9% to Rotterdam, 8% to the Mediterranean. This is, as always, via Drury's World Container Index. And then we were down, I think it was down 12% to Los Angeles and 11% to New York. So double-digit decreases on the Trans-Pacific, and very close to double-digit decreases on the Asia-Europe trades. Space isn't a problem for forwarders. I've been hearing just shortly before coming on the call, rates are expected to further drop. So that sort of pre-Chinese New Year bump that the trade started with really appears to have evaporated now.
You did mention last episode that you thought we were at the peak or just past the peak. Alex, I'd be interested to know how this compares to what's happening in air. Do you have any air freight rate data for us?
I'm not going to be very specific about it, but very broadly speaking, rates fell in week one, rose in week two, and fell again in week three. Now, that happened as a lot more capacity was introduced. So Vian said last week that something like 4% extra cargo capacity in air so far this year. So the interesting thing will be whether demand manages to keep up with that. Demand is currently predicted to be 2 to 3% growth, which looks like we're going to have some low rates this year if that extra capacity stays in through the year. One thing I thought was quite interesting was that I saw that the European Aviation Safety Organization, EASA, has told airlines not to fly through Iranian and Iraqi airspace. Now, that's added according to KLM Cargo, between 10 and 30 minutes per flight from certain points in Asia to Europe. Obviously, that comes with additional fuel costs because it's more fuel, and it said it's may play havoc with its scheduled arrival and departure time, and therefore airport slots. So, although it doesn't seem very much on the face of it, it could have some sort of little staggered effect on airline operations. Sorry, so that was quite interesting, and I imagine there'll be more airspace closures around the world at various times this year. But that's the one happening right now.
And while I've got you here, Alex, could you give our listeners a little tease of what's been on premium last week, please?
I certainly can. So we looked at CMA CGM, which, as our headline will tell you, is sniffing around Le Havre with something in mind to buy there. I'd read the story. There's also actually a really good article on now I'm all into TMS systems. Really good article on DSV and CargoWise and what's likely to happen there, and whether they're going to develop their Schenker's Tango system. We had what probably is essential reading on mandatory cyber attack reporting, which you should probably know about. We've got an article on UPS and robots, and also a look at how investors in the transport and logistics space might be reacting to geopolitical shocks. So, yeah, as ever, loads there.
Lots and lots. And you mentioned a bit at the beginning that next week you were going to be looking at CargoWise. Is there anything else on your radar next week?
Yeah, like I say, CargoWise will be keeping me busy, but also we're working with Avian on looking at how air cargo might fare in 2026 based on the enormous amount of data points that they have. So we'll be bringing you something about that.
Wonderful. I look forward to that. We're still waiting for the tariff decision as well. I feel like we're going to be saying it for quite a few episodes. We're like, right, tariff decision this week, but hopefully it will be coming soon.
What do what's the thinking on when there might be some notice on that?
It
I
has to
genuinely have
be
no idea.
it has to be before July, I think, is the current rule. But they release it. I think they release results, or not results. They release their decisions 2 times a week, but they don't tell you what it is that they're going to be ruling on. Anyone who is interested, there's a great little Supreme Court blog and journalists there who are giving you up to the minute stuff on what's going on. And yeah, when everyone thought that they were going to release a decision last week, it was absolutely full of people waiting to hear about tariffs from all over the world. It's quite a nice little chat room if anyone wants to have a look.
And does these decisions, they're released on the same day each week? So is it like every Tuesday and Thursday?
It's something like that, yeah. I think
Yeah.
the last one was I think it's Tuesdays and Fridays. I'd have to check, but yeah.
I've got
Go and have
Mondays
a
and
look at the
Wednesdays
blog.
in my head for some reason, but
Either way, we should start running a
it's
book or something.
it's either a Tuesday, Friday, Monday, or Wednesday between now and July. So that's
But
some
if
good
you're
Brilliant.
reading the
information.
Loadstar, we will keep you updated.
Exactly. Thank you, Alex. It's like when you're waiting for a parcel and they say it's going to be delivered between like 10 a.m. and 6 p.m. So brilliant. Anyway, we will leave it there. Thank you both so much for joining me this week for another episode of Recapping Supply Chain News. It's been wonderful.
Thanks, Charlotte.
It's been an absolute pleasure. Thank you, Charlotte.
And thank you to everyone watching. If you are over on YouTube, please like, subscribe, comment, share, all of that. And if you're not watching on YouTube, then go over to YouTube and like, share, subscribe, comment, all of that. Thank you very much for joining me, and we will see you next week.